Economic viability of clean energy was challenged for quite a long time, but what we've seen is that technology has improved to such an extent and costs has come down as a consequence that electric vehicles and renewable power have gotten a lot more economic over time. And just to put some numbers behind that, the battery in your electric vehicle has come down in cost by over half in just the last 10 years. And similarly, wind turbines can put out 4 times the power they could just 10 years ago. So in summary, we see tremendous opportunity and sustainability for these products and services going forward, even without subsidy. We're at an exciting inflection point in the life cycle of clean energy. We're at a point where changing government policy and changing societal preferences are converging with technology and costs such that clean energy alternatives are economically viable. And so we think that that means that adoption rates will skyrocket over the next 5 years as more and more people decide to displace their current alternatives, their conventional alternatives, with electric vehicles or renewable energy. The 3 common threads or drivers underpinning our clean investment strategy are disruption, sustainability, and efficiency. We've seen firsthand how things like renewable energy, wind and solar, have taken market share from traditional coal and nuclear power. We understand the investment required to replace an aging water infrastructure in this country and abroad. And we see on the horizon the implications for oil demand from the electrification of the vehicle fleet. So these 3 things, disruption, sustainability, and efficiency, really underpin and define how we look at our universe and inform the verticals that we use to invest.
Our clean energy and sustainability strategy includes 4 different clean verticals: clean energy, clean infrastructure, clean transportation, and clean water. Starting with clean energy, this includes renewable energy generation sources such as solar and wind that are disrupting the current power generation market. Clean infrastructure, given the way we consume and produce electricity and energy is changing, there is a significant need and significant investment to upgrade and modernize our current electric grid system. Clean transportation, we are witnessing an electrification of the transportation industry with the rise of electric, hybrid, and autonomous vehicles. We're also seeing significant declines in battery cost as well as technology. Clean water. Clean water is a unique commodity that we cannot live without, that's increasingly scarce, and demand is projected to grow dramatically over time. So we see significant growth within that vertical as well. An example of a company in our clean energy vertical is TPI Composites. TPI Composites is an outsourced maker of wind blades for a number of North American and European wind developers and turbine manufacturers. In clean infrastructure, an example of a company is Itron. Itron is supplying the technology and network infrastructure to upgrade our current electric grid, water, and gas infrastructure and make it more reliable and more efficient. In clean transportation, an example is Aptiv. Aptiv is a supplier, auto supplier of powertrain, safety, and electronic systems for a variety of auto manufacturers, electric vehicle and autonomous vehicle platforms. And finally, an example of a company in our clean water vertical is Xylem. It's involved across the water value chain from the supply infrastructure to the downstream treatment infrastructure.